My guest today is Amir Haboosheh. He's the co-founder and CEO of Snowball Industries. Thanks a lot for coming to the Holdco Builder show, Amir.
Thank you for having me, Mick.
Awesome. So let's start with you sharing who you are and what you do, and a bit of your background, and maybe starting and covering everything which has happened after school.
Sure. I'll start with who I am. I'm the CEO of Snowball Industries. Snowball Industries is a holding company for the trades with a goal of being one of the few publicly traded companies, and this is more of the bigger vision that focuses on HVAC, plumbing, and electrical, both in home services and construction. What we do is, as mentioned earlier, a holding company. Our main goal is really to try to be a decentralized, at least how our relationship with the operating companies to be decentralized and have an operating company in every single state throughout the country. That's the only way we're able to scale, is having that mindset with each location to eventually have both HVAC, plumbing, and electrical as part of their trades and services that they provide. So that's what we do, and that's my role. As far as after school, I actually didn't graduate college. I dropped out of community college right around early 2000 and got involved, or late 1990s, and got involved, at least where I started my career, in cybersecurity and enterprise IT. And if you remember, back in the day of Y2K and everything else, it was definitely booming back then. Later on, gravitated towards online businesses, especially with a focus on digital marketing. That's actually how I got into buying businesses, a lot of niche sites, SaaS, D2C, e-commerce businesses. Continue doing that, and that itself was a pretty small community. And met my current co-founder at Snowball, or one of the co-founders at Snowball, through a PE group that he incepted that focuses on online businesses. Exactly what I was doing. Joined as a LP, became an operator, continue investing in every deal that we were involved in. And then as I was doing that, alongside that, spent time with a good family friend of mine that runs a family office that invests in early stage companies and provides advisory services to take them public, specifically on the OTCQB. And for those not familiar with that exchange, think of it more of like a training wheels before you uplist to NASDAQ and New York. So was working with them with that actually was probably like one of the more relevant to what I'm doing today at Snowball, with the idea of us going public, where a lot of that came as part of our original thesis to provide liquidity for our investors. So continuing with that path, my co-founder, after selling a lot of the assets out of the online businesses, started looking into more brick and mortar traditional businesses like HVAC, plumbing, roofing, landscaping, etc. Joined them at that peak, at that private equity group. It's more of an accelerator where we help searchers acquire small, mid-sized businesses, help them navigate through the whole process from sourcing, post-acquisition, integration, and growth. And that's when we actually realized there was a much larger opportunity where the businesses that are doing 10, 15 million plus are not the right size for SBA and searchers in terms of the size for them to be able to close and acquire. That's how Snowball started, right around that. So just so that's my background and what I do.
Okay, and maybe going back a bit about the founding of Snowball. I was listening another podcast with you, and you were saying that you got together with three other like-minded people, and you were talking from 10 a.m. till 10 p.m. and you pretty much at that day put together like a plan or strategy for the future. And did you did you think about any other industries other than home services, or how was it?
No, our focus was home and commercial and construction. So the type of businesses that we were looking at the time was pool services, landscaping, commercial, residential, and roofing as well. We honed in throughout that process on HVAC and plumbing, uh, uh, mainly because we really have probably the most experience there in generating revenue from our previous acquisitions that were helping other searchers. And you want to have at least a focus. Even though they're all related to construction, they're all related to home services and similar industries, having a focus on one or two trades really helps you dig in deeper and build a much better knowledge base on the business itself, because each one of them is unique in terms of the opportunity and the acquisition and the integration and growth thereafter. So narrowing was really a part of our exercise and part of our discussion. And you hit it in the head. And from that other podcast that I mentioned, it was I think Will Smith's podcast where both Sieva, Xavier, and Devin flew down to LA. We were introduced through a mutual friend, Robert Babbage, which is our first investor and continue being an advocate and really an advisor for Snowball throughout the past 3 years. And quite a few of his family and friends invested in our company as well. And he introduced, connected Devin and Xavier, clicked right away. Each one of us, they call their co-founding counterparts as far as how like-minded we are and pretty much tracking the same direction and goal of buying these hidden gems out there, which clearly they're not hidden anymore. But at the time, they weren't as known in terms of the opportunity. So all of us met up on a Zoom call, really like-minded in terms of value investing and the people first mentality and really being advocates for all stakeholders, which is not just investors, but also employees and vendors and other relationships and partners in the business that you're involved in.
Going back to the first acquisition, how was the whole fundraising journey, and how long it took from you to when you were sitting down with the co-founders to actually acquiring the first company and getting the deal done?
Sure. So as far as raising capital, we actually have a friend and partner that invested in previous deals with us, Manpreet Singh from Singh Capital Partners. He pretty much runs a family office investment group and was our backer in providing the equity to Snowball to close on the two acquisitions. As far as the relationship with this, did you mean the sellers? Is that what you meant? As far as building
Yes.
relations, that's something that it's not just unique to us, but something that we know that it's how we prefer doing acquisitions. Quite a few other companies approach it this way as well, which is really relationship based. We try to spend a good time with the co-founders, get to know them, get to know the business beyond what the sim provides or whatever after hours time that that they allow us to access the building. We build a bond with them and be able to actually get a bit more visibility into the business as much as we can, so that we're ready in terms of identifying if there's a management team in place, if there's someone that we can elevate into a leadership role as a general manager, or do we need to start recruiting? Which that whole process starts day one after LOI.
I don't know about the recent news, but last time you had like 6 companies in your portfolio. What companies are these?
Sure. So they're all either plumbing, HVAC, or both, for the exception of digital marketing that we have out of Toronto, Canada, that specializes in the trades. And they're located pretty much throughout the country. We have a plumbing company that the two additional more recent acquisitions we did was to add HVAC to their division. That's in Phoenix, Arizona, right before the heat wave too. So it definitely was a good timing on our end there. And then the other two acquisitions, one of them is in Northwest Arkansas. That's a HVAC new construction and home service business. If you've never been to Northwest Arkansas, highly recommend. Beautiful corner of the state. And then Fairfax, Virginia is where we have our contracting company that does plumbing, HVAC, as well as facility management to pretty large companies out there like the IMF and the World Bank.
I'm sure you look at tens, if not hundreds of different companies. But what do Snowball team look at when acquiring a business? Like, what are the immediate red flags? What type of revenue? What type of profit? What type of location? Could you maybe cover a bit of that?
Yeah, so hundreds is correct. Thousands is definitely just as accurate. We go through quite a bit of deal flow. There isn't just one size fits all for us. It's what makes us unique is actually the fact that we're opportunistic in the sense of we're looking at the messy businesses just as well as the ones that are operating well with a good management team. Each deal would look different and have its own lens that we would approach it towards. If it's a location that we don't have any presence, then we want to make sure that it's a bit more baked in, has a leadership team or potential for a leadership team, or if it doesn't, has a pretty decent, sizable EBITDA where we can bring in a GM or an operations manager day one. So think about it more having $1 million in EBITDA in a state that we have no presence. If it's a state that we actually have presence and we want to add, it's not too far, maybe an hour drive from the location. It could be either a bolt-on or strategic acquisition that we can start building 2 brands in that market. We've seen deals that are 70 million in revenue. We've seen deals that are 1 million in revenue. All of them have something unique that would be interesting for us. Really depending on also outside of everything that I said is how far it is from either myself or our COO, because of our nature of being a remote company. Travel is something we do frequently. So if it requires a little bit more work, but it's still a good business and has a good margin to build off of, then as long as it's within a day, an hour flight, 2-hour flight, we can make that work. So definitely requires a bit more elbow grease to get some of these deals done, but that's how we are able to find deals still under 3-4x multiple, where quite a few are definitely, even with the softening of the market, still going for 7-8x.
Okay, you mentioned building relationships with those companies, but I believe other folks are doing the same. How much competition is there on those deals?
A lot of competition. There's no question about it, especially the ones that are broker represented. For us, what's unique to us is we have quite a few people from the trades with a great reputation, and we keep building a strong reputation, attending every event we can, sponsoring them, trying to give back to the community as much as possible. Where when our team calls and gets that first nod to connect with the owner, we already have a reputation and background about us that they actually want to sell to us. We hear that quite frequently, that they would rather sell to us a turn lower than another a competitor or a private equity group or searcher, mainly because of our vision and our focus on improving the lives of their team and the culture that they built. And those are buzzwords that I hear very frequently. Pretty much everybody uses them. Lucky for us, we can just connect them with a previous owner, or we can connect them with a general manager, and they can talk and share their story and their journey over the past year or two, and tell them, be as transparent as possible, share the negative and the positive, because business is challenging and no acquisition goes smooth, but let them know the full journey. So that's one way for us to actually be able to share real stories of our acquisitions, so they know we're just not leveraging buzzwords and keywords in order to make it seem that that's important to us. It's actually important to us.
When we compare off-market deals and broker represented deals, what is the ratio in here at this stage with those 6 acquisitions?
Outside of the first 2 acquisitions, none of our deals have been brokered. All of them have been off market, either through referrals or relationships or our business development team. And the businesses that we have under LOI, the 3 that we have under LOI, same thing, referrals or an event that we attended and someone heard of us or heard what we're talking about or discussing, and they reached out and share their information for us to follow up with, or our business development team. Quite frankly, we have a pretty significant pipeline at this point that we haven't really pursued that aggressively on building, going after broker represented deals, even though here and there when we get newsletters, we see quite a few deals that the multiples are looking attractive. But outside of just the price and the multiples, what matters for us is having a bit more transparency into the business. And just from previous experience, and this might have changed with brokers, and I know with some of them, definitely they provide a lot more value than others. You're not just getting the rosy picture when you're doing your own legwork through off market. You get to actually meet the certain key leadership teams, because the owner does want a smoother transition. And we've built enough trust that they feel comfortable with that. So we're able to have more visibility as far as what are the first 90 days, 60 days, 30 days that we have to focus on. Typically, you wouldn't get that with a broker representative. Everything is not sealed off, but managed and controlled as far as the dialogue and information flow, as opposed to when you have no middleman in between. So it goes a little bit beyond just getting a better price. It's about having a better visibility into the operation, and also being able to structure a deal where it's collaborative. It's not just trying to get 90%, 80% at close. It's being able to do what's best for both sides to get the deal done. A lot easier when it's 2 parties versus 3.
You mentioned doing acquisitions 3 times EBITDA. I mean, it seems like getting a great discount. Is there any secrets how you're able to do that?
We have a master negotiator in our COO, but no great secrets. You get the 3x when a couple of factors go into that. One, the type of business. If it was a perfect home service business, 100% residential, doing HVAC and plumbing with great margin, leadership team through and through, and it's turnkey day one, and you just have to turn up the marketing. That company earned 8x and above, and we see that quite frequently. For us, in order to get that 3x, we look at construction companies, whether it's new construction or contracting, but at least 50% of the revenue needs to be from service, or the service company is so under optimized and the construction side is cash flowing robustly that we can focus on the growth of the service. But that's part of our math on internal rate of return that we want to aim at, which is at the minimum above 60% plus, and that's actually on the low end. So that's pretty much how we get the 3x. It's relationship building, great negotiation, collaborative negotiation, and the willingness to buy beyond just the perfect business or the perfectly home service business versus having a bit of a messy part or a part that people are concerned on because of macroeconomics or anything else.
Talking about the numbers, Snowball today, am I correct? 45 million in revenue, EBITDA around 3.5 by the end of this year.
Yeah, so our budget for this year, you're correct, is we're targeting 45 actually on the high end. We like to give a range 42 to 45, and then EBITDA same 3.5 to 4. You're absolutely correct and excited about that.
Now, talking about those different portfolio companies, how much time are you spending actually on each company, each business on day-to-day basis?
Not much. We have a great leadership team in every single operating company. Our role is have weekly one-on-ones with the GMs. My COO spends a lot more time with them than I do. That's his focus, his operation. Mine is more working with my execs and working with our managing up a bit more, communicating to our investors, our boards, board of directors, and then if there's any specific role or assistance that they need, I do get involved, especially with my background in marketing. But what the idea is within 30 to 60 days to really extract myself out of that if I have to. But rolling up the sleeve, being a lean holding company is part of what every single one of us does, and the willingness to do it because we have more of a shared vision and a greater growth of helping each other and keep moving forward. But that's significantly less than when we started versus now. It's in fact probably something that I noticed that I have more time to do is just spend some time physically at the locations, travel, meet them in person, meet the teams, attend their trainings in the morning, and a bit more casually than actually having an agenda. Always there is something to work on, to coach through, to strategize over, but less so with acquisitions that we've already had part of our portfolio more than a year. Usually after the 1 year mark, they're hitting their own stride.
Now, talking about talent, you said in one of the podcasts which I was listening, you said every person in Snowball is better than you at what they do. How do you attract these people?
So probably one word that comes to mind is transparency. Being very open about our history, our weaknesses, our challenges, things that we need to work on. We could spend quite a bit of time trying to persuade talent, but setting that expectation never is a good start, especially at the executive level at Snowball. We want them to disqualify us as much as we're qualifying them. They have many opportunities to work elsewhere. Saying yes to us is effectively saying no to 5-10 different opportunities that they might have had and life paths that they would have. So people know that about us. People know that we're very transparent. It's in our culture. We're also very lead with empathy and kindness. So we make sure that That's part of the language that not only we speak, our executives speak, and our leadership teams. Lucky for us, we've been able to attract quite a bit of talent because of that. People want to join our mission of impacting change. What better way to do it in the industry where you have the most amount of people working on there? It's not something that you can easily outsource. It's not something that you can easily offshore. You still need a plumber to fix your toilet. You still need a HVAC tech to come and fix your HVAC unit. Having that level of impact is something that drives me, and is something that drives quite a few talented people to work with us. So that's. I hope that helps.
6 businesses. Does it mean you have 6 different general managers?
So we have 4 businesses. The other 2 were bolt-on acquisitions. Yes, we have 3 general managers and 1 operation manager. The operation manager is for the marketing company. It's a small marketing company, so it doesn't quite require a GM quite yet. But yes, absolutely. Not only do we have a GM, but we have a whole leadership team. We have an operations manager under the GM. We have a pre-construction manager, a service manager, people and culture, operations, people ops. It's having a controller, senior accountants, where they can provide operational insight to the leadership team, so they're not relying on the holding company in order to provide the timely information that they need. So it's not just a GM; it's a full-on leadership team having their own quarterly workshops, their own weekly leadership meetings, and so on.
Post acquisitions, does the general manager comes from the company, or you're recruiting a new one?
Right around 50-50, I would say right now. Our plumbing companies recruiting from the outside. Our Northwest Arkansas is from within, and the same at the Fairfax, Virginia location. It's part of us being able to really deep dive into the org chart and into the team under the owner, is trying to identify who is the leadership team. Can we elevate them into that general manager position through our coaching and development program, especially with our leadership workshops that we do quarterly. So far it's been 50-50. Same with recruiting. As soon as we get into LOI, we start recruiting, seeing the location of the business, if we have someone there, or someone that is willing to relocate from our network. We have a good 2 to 3 months from LOI to be able to really flush out. Does it need an outside GM? Can we work from someone from within? That's definitely part of our due diligence process.
You mentioned something very interesting in one of your previous podcasts. When bringing in a general manager, it's a wise decision to bring someone who's been operating a business 2 or 3 times the size the current business is. Could you please explain, ideally, your experience on that?
Yeah, so I would, even if it's not 2 to 3, because that sometimes could be hard, but at least significantly larger from the business that you currently have. The reason for that is a few folds. One, you want a GM that knows what good looks like, or knows where you want to take the business. Similar to Wayne Gretzky type of thinking. Don't go where the hockey puck is, go where it's going to be. So bring someone that is able to know what the organization makeup needs to be and look like in order for you to hit 8 million in revenue, 10 million in revenue, and beyond, depending on the size of the business you bought. And ideally, you wouldn't hire the GM from that location. You would hire the second in command. You would hire you would try to recruit and attract the operations manager, because there's a high likelihood that he doesn't have career mobility into GM position, and you're about to give him that, and he wants to flex and show what he's learned and his experience, and have a chance to prove himself too. So you bring on the second command, and that's that. With that also, you usually get someone that has a good relationship with the technicians and CSRs and other people that worked under him. And this is specific to HVAC, but it could apply to any industry. People that worked under him, so that if post acquisition there's one or two individuals that don't like the changes, well, this operations manager that now is the general manager has a Rolodex to call on, and people that actually want to work with them, regardless of where he's located at. So you get quite a few benefits there. You get real experience operation manager that wants to prove himself with a Rolodex of technicians or other support staff that like working for him and willing to move.
In Snowball, 30 days after acquisition, you are doing a workshop. Could you explain what does it mean? And
Sure. Yeah, sure. So it's a very similar to traction, where we try to really have a structured environment to get our at least the initially identified leadership team together at the first time, for them to discuss any issues that they had previously over the past year or two, anything that they liked, anything that they longed for, everything that they lacked or learned. Really, what we're trying to do is get a unification around the issues and seeing any patterns that we can identify and start taking actionable items around, and assigning that to the head of that department, or at the time the GM or construction manager or service manager, depending on the roles and action items for them. We provide a caveat that very rarely the leadership in the first 30 days is the same leadership team a year later, 12 months later, because some people don't want the responsibility. Some people self-select out and they prefer a different role, and for them to know that that's okay. But we want to make sure at least we're going through the motions, providing visibility into the org chart going forward. Very frequently, smaller businesses or even bigger businesses never had a org chart. It's pretty much the owner and everybody else under. So really fleshing out an org chart, trying to limit the direct reports of any individuals to no more than 5, really provides a more fleshed out organization, where they know who to report to, minimize this confusion, provides clarity, and then us being able to have them take ownership in the action items until the next workshop, knowing that we're obviously a resource for them to be able to accomplish that.
Talking about incentives, motivating people to do a great job, you've brought out, or you've said in previous podcast, path of ownership. I would like to talk a little bit about this. How do you make sure it's the right amount of shares you're giving away, and how you make sure it's not too little, not too much? How is the process?
Yeah, I'm less concerned about too much. Definitely concerned on too little. You, regardless of what that is, you start with an amount, and it could be 5-10% of their base salary in terms of the current valuation of the organization and of Snowball, and then you have a vesting period on top of that. But as since you don't really have the visibility on the talent on day one of the acquisition, over the next 12 months, it's your job to see what type of value different people provided that you definitely either not so much was misrepresented, but misinformed. Maybe you're within your organization, they had a chance to actually show more of what they can bring, and they had that sense of um, excitement to prove themselves. So then a year later, you can reflect and provide additional shares. Either you double the share count, or you increase it by 50% more. So it's a lot of that will depend on the first 12 months to be able to identify who's really providing value, and for you to bonus that out. But our goal is to make sure everybody has a path of ownership. So if there's any bonus pay or salary or part of their income that they prefer receiving in shares, depending on the valuation of Snowball or on the last raise, we can math out that we can exchange this much of your bonus for this many shares. When that happens, that's already vested shares, as opposed to ones that is granted from Snowball. Those are vestable shares.
Talking about the Snowball University, leadership training, management training, financial training, in general, Snowball University. Could you maybe share your thoughts on if and why each holding company or even company should have their own so-called Snowball University?
Yeah, so I don't know if each one should have their own. It's definitely something unique to us. We tried. There's fantastic outside training companies that provide really good value. We just noticed because of our unique makeup of portfolio companies between new construction, residential new construction, contracting, service, the maturity of the leadership team in terms of their experience required significantly more investment from our end. And our approach is very much so long term in anything we do. We think in decades, not in quarters. So for us, knowing that where we want to be meant having our own best practices, very tailored proprietary training for our staff at the different level, made it an easier decision that we should invest in this sooner than later. We absolutely tried with outside training programs for a good year or two. None of them quite hit the mark. And at the end, investing in that and building that in-house cost, especially when you have three portfolio companies in the trades, the cost was equal. So any acquisition thereafter will just makes it even easier of a decision for us financially. But also providing, instead of once a week coaching or once a month coaching, it's something that just wasn't enough. So having that in-house, providing daily, if we want to, every single leadership position within the organization, it doesn't cost us anymore because we have a person in-house that's their focus as a director of education and training. So highly excited about Snowball University. I think as of today, we have all 5 modules complete, and we're working on then expanding further into marketing, into other roles, install manager, and everything else that is even more tailored and more focused as the need comes up.
Correct me if I'm wrong. Your first acquisition's Anderson Air.
Mm-hmm. Correct.
A company with no website in the beginning. You and your team have grown it from 10 million in revenue to 21 million in revenue by the end of this year, from 30 people to 70 people. How has that happened?
Yeah, so first of all, definitely was not me, but I appreciate that. It was more the team at Anderson. I would say what made that unique is the culture that they have, and really driven by the general manager, by the people and culture manager, and everything within the company. When you walk into Anderson Air, they will treat you like family, regardless if you are, and that's just that's what makes them very unique for that organization. So you want to be a part of that. What really helped is the owner building such a strong reputation of respect and integrity that people wanted to work for Anderson. So now, as they were growing, they have a virtual line of people wanting to apply and continue being part of that company. The reputation is just remarkable. We're able to just amplify that by bringing attention to it, by way of having a website, by way of building a service department, by way of providing some branding, so people are noticing it more. But the job and the groundwork was done for us, which is part of what we look for when we do an acquisition. Tying back to what you were asking earlier, really reputation matters the most for us when we do an acquisition, because we can build everything else thereafter. So that's really how we were able to go from 10 to 20 million, providing a lot of coaching and guidance in terms of navigating new construction and building a service company alongside it. That probably was the harder effort to do, because it's a completely different type of business, and that took a bit longer than anticipated on our end, just like any project usually does. But the results are just remarkable, and they're excited to now go into plumbing. They're excited to keep expanding the Anderson name. We're excited alongside them. I get to be their most vocal fan. So
Where do you see this company can grow? Like how large?
so they're ambitious. They want to be a $1 billion revenue company that spans Texas, Arkansas, Missouri, and Oklahoma. And I'm not the one that's going to stop them.
Will it be under Snowball till it happens?
All of our companies is a forever hold. Our mentality is when we acquire forever. There's no second flip for us. Not for any acquisition we do, not for Snowball itself. Our whole liquidity path for our investors and all stakeholders is to be a publicly listed company. So for us, when we acquire a company, we can actually tell with conviction to sellers, when you sell to us, you sell forever, and that's the mindset we have. We just want to keep growing and keep having a presence in every single state.
Okay, Anderson Air was one case, but what about the others? What you see even during the due diligence when you do it? Like, what is the biggest value add you already see you can do? Like, okay, we want this company because we are going to do X, Y, and Z.
So I can give you a few examples that we have with the companies we have under LOI, so it'll be more timely and fruitful for you. The company we have out in Washington State, plumbing residential company, they do commercial as well. What's unique about them, it's relatively small, 4 million in revenue, a little bit more than 4 million in revenue. What's unique about that opportunity for us is really their branding, which is quite a remarkable branding that they've done. It lends itself to be a national brand that we can really build similar to our core values of long-term thinking. We can build that brand alongside the local brands that we're acquiring. So investing in marketing, investing in branding, buying smaller operations in different states that really haven't had a chance to set up deep roots in the community in terms of having a brand presence. We can apply their branding and start having a second brand in a state we're already operating under, and leverage that nationally. So for us, that opportunity presented itself mainly because of the branding. Still great multiple, still great business, but one that we're seeing a much bigger opportunity than normally we would for a plumbing residential company, and a little bit of commercial. Another business that we were looking at was out in Maryland. 3 million in revenue, 100% residential plumbing, because it was about 45 minutes or so to an hour from our Fairfax, Virginia location. It made sense for us to go after that company. Otherwise, it would have just been too small for us, and didn't have much of a back office support. Us having back office support and space in the Virginia location, Clover, made sense for us to pursue that acquisitions, because it was very complementary in terms of really expanding on our residential plumbing and leveraging the operating expenses that we have out of our Fairfax location. So each one has its own unique opportunity that presents itself. It's why we're not a very cookie cutter acquisition mindset, or we don't have that mindset, and that's what allows us to still find deals in that low single digit multiples.
I find it so interesting that you decided to acquire one marketing company, and this is what I would like to talk about. Online marketing in general. I mean, these are such so-called boring businesses with long history, and they have a quite strong, not quite, but really strong offline brand with their own community, with their own relationships. What are your thoughts, and how are you going to improve that with the content, with SEO, maybe even Instagram videos or TikTok videos?
Yeah, videos are hard. I wish we did more videos. It's not as easy to get a plumber and HVAC tech wanting to do a 30-second Instagram or TikTok videos. We're trying, but SEO content and everything that relates to SEO, which is backlinks and guest posting and keep connecting to or bringing traffic to your website and all those details. It's something that this marketing company that we acquired is their expertise. In fact, their expertise has been built around really providing a white glove service in every marketing service that they provide, whether it's paid media, whether it's social media, whether it's SEO. They go above and beyond what typically you would engage a company, because our focus there is to really grow through referrals, and so that they can continue having that high touch, high level type of services that they are best at providing, and more of a boutique marketing company. But to give you an example of what they've accomplished with actually the Anderson company that you mentioned earlier, that didn't have a website when we acquired them. It did take us a bit too long to even build a website. It took us it was our first acquisition, so it took us a good 9 months before we launched the website. So fast forward now, less than 2 years, or right about 2 years next month, and we have close to 40,000 visitors a month. For a company that didn't have a website 2 years ago, for them to have 40,000 visitors is remarkable. Not all of them obviously are from Northwest Arkansas. That's the nature of content marketing. You would just, when content ranks so well, you will naturally get traffic from all over the country. But as I mentioned earlier, if we're building that national brand, and we're building, our goal is to have presence in every single state. Now we can detect traffic that is coming in from states outside of where Anderson services, and refer traffic to our other entities in other states, and continue just taking advantage of our SEO expertise in all the different states that we operate in. So yeah, it's I couldn't be more prouder of that team and what they do.
Going a bit more specific, let's say the company 2 or 3 or 4 which you acquired, they already had a marketing team, whether it was just a one person or more, someone who was taking care of SEO, for example. How do you do it now? Once you acquire this business, there was a person who took care of SEO, but now you have even a better person who knows more about SEO. What are you going to do? How are you going to solve this?
Sure.
Even if is it the case or not?
Yeah, it's definitely not the case. We've have not come across that. It's just if it is, chances are it's the owner wearing that hat. Chances are it's a relative wearing that hat, and they can't wait to let go of that hat. But hypothetically speaking, if there is one, and they're a marketer, um, even so, that would be really a gift for us, because then that person is able to, we'll have them work with our marketing company, and it's basically we'll treat it as a vendor that they can that they use. Uh, Very, outside of marketing, branding, you have radio, you have podcasts, we have billboards. There's a lot for a marketer to do. Get direct mail, get them any leave behinds, getting uniforms, pictures, videos, like we mentioned. As if someone is physically present at a location and wearing the marketing hat, there is a ton to do, and ton that they would rather do than writing articles and trying to get guest posting from other sites in order to rank. If anything, they would rather pass down that expertise, and them having the understanding of it by itself is value add, because then they know that the value that our marketing company provides, and everything goes a lot faster. In fact, our goal is that within a year to identify at least someone that can wear the marketing hat. Very typically, that becomes either the office manager or the people and culture manager, mainly because Instagram is such a good outlet to showcase culture and help for recruiting and customer testimonials, and that's what they enjoy doing, because that's the fun part of marketing. SEO, paid media, that's the challenging one that our team, our digital marketing team, actually enjoys doing, because they know they can drive success through it. So yeah, if there is a marketing company within the company, or someone that wants to wear the marketing hat, we couldn't be happier. Makes our lives a lot easier.
Okay, Amir, I know you're busy. So, what's the few last questions? What's the future of Snowball Industries? It's
Keep doing.
20, let's say today it's 2023. What's going to happen when it's 2027?
Okay, so if everything works out correctly, we'll be a publicly listed company. We would acquire 10 more companies by then. We try to average at least two a year going forward. Um, and we have a few already under LOI, which is why 10. And then keep doing that. Keep buying businesses, keep growing, keep providing a path of ownership to our staff. Ideally, by 2027, we're tracking to be one of the largest home service construction companies. I don't want to give too much forward-looking statements, but definitely excited to continue being in this seat, and growing exponentially.
That's awesome. So, let's wrap up with a famous five. I'll ask you a question and you'll give me a short answer.
Sure.
How old are you?
I'm 43 years old.
Favorite book?
Favorite book? Love Warren Buffett books, especially Snowball, which is hat tip from his autobiography. It's our whole name is a hat tip to him. Um, but a book that actually stands out for me, it's a book that I read very early on. It's called the Tao of Winnie the Pooh. It's a, I don't know if it's a children's book or someone that the adults can read. But what I've noticed that it helped is build temperament. I think Charlie Munger said it early, don't read philosophy books too early, because it'll curb ambition. I haven't seen that. I don't think he's wrong. I'm pretty sure he's spot on. But what it helped me, and probably what I recommend people, is once they in their 30s, might be worth picking up a few philosophy books, only to build some temperament. because businesses are going to be challenging, and it's good to have a steady hand.
Married, single, kids?
Married with one daughter.
What car do you drive?
So I own a Range Rover. But my weekend car is a bus.
Okay. What's the best investment advice you've ever got?
I mean, it's a cliche. People say it all the time, but invest in yourself, bank on yourself. Whether it's the time that you invest in yourself, and even if you provide your services for free, that experience, Steve Jobs said it the best. You'll never know how you're going to connect the dots backwards, and in all the endeavors that you had, all the classes that you took. Keep investing in yourself. Budget that if you have to.
Okay. And where can people find you?
I'm most active on Twitter. My last name is my handle. It's Haboosheh. You can find me also on LinkedIn. And if you want to hear more about Snowball, I recommend joining our newsletter for updates. And that's on snowballinc.com.
Awesome. Thanks a lot, Amir. I really appreciate that you took a time to share your journey, and I'm sure it's going to be fun for you, and it's going to be fun next few years.
Thank you, Mick. I appreciate you having me.